Hello, we are here with Luis Oganes, Head of Macro Research from JP Morgan. I don't know, Luis, you want to introduce yourself a bit?
Yes, hello. Thanks for the invitation. I'm Luis Oganes. I manage global macro research at JP Morgan. I'm based in London. Global macro research are the teams that are covering currencies, commodities, interest rates, and emerging markets in the bank.
Great, great. I would like to ask you, when it comes to investments opportunities, what is the similarities and the difference between Latin America market and the Iberia region?
I would say probably the main difference is certainly the sense of political institutional stability that in Latin America, even though oftentimes you have higher growth rates in Latin America than in Iberia or than in Europe more generally. People oftentimes seek, places where they can predict their futures a bit more, where elections don't come and go and revolutionize everything. And so I think that probably institutional, political, economic certainty versus uncertainty, that is the trade-off.
Great. And considering their specifics for each region, what is the main economic outlook for each region that you guys are looking right now?
Well, for Latin America, we're expecting growth close to 2% in 2025, a little bit lower than the previous year, but still, quite decent. Inflation has been coming lower in most countries. Still, some countries are having a bit more of a challenge. Central banks, for the most part, except for Brazil, are having cutting interest rates. So, they're in the positive side of the cycle. But situation is obviously quite uncertain given the U.S. tariffs, and whether that is going to affect the region or not. It could actually benefit by the region exporting more to China. That could be a positive byproduct of everything that's going on. In the case of Iberia, certainly, in the particular case of Spain, it is interesting. Spain, our forecast for this year for growth is 2.7%. It's almost 3 times the average growth for the Eurozone, which is just 1%. Again, everyone's waiting to see what happens with the U.S. tariffs and how it affects and potential repercussions. But certainly Iberia, I think, stands out within Europe as the place that is going to outperform in terms of growth.
Do you think Portugal is same as Spain, or how do you feel?
Yeah, we don't formally cover Portugal, so we don't have a forecast there, but a lot of the dynamics are quite similar to Spain, and I think that is why certainly Latin American investors do see both Spain and Portugal as attractive destinations for investment.
Great, great. And with all these challenges that we are thinking and seeing Latin America, also for the other regions, what do you think for both will be attractive for the investors in the new future?
Well, certainly people are looking again for security, for quality of life, for stability. I think that certainly Iberia offers that. You have a currency that actually, in this day and age, when people are questioning, the role of the dollar and a lot of the policies that are being pursued in the U.S. right now seem to be pushing potentially the U.S. economy into a recession, the dollar is going to suffer. So interestingly enough, there is some interest in diversifying away from the dollar. The euro, from that perspective, is potentially in a good position, right? Particularly Germany, as you know, has been promising more spending. That Germany is 30% of the eurozone. Any acceleration of growth in Germany, curiously enough, is going to have positive repercussions in the eurozone. So what's not to like, right? And so I think probably you're going to see more investment flows coming this way.
That's great. And the perspective is for like 5 years, 3 years. What do you think about it?
Well, it's hard to tell. Certainly, there are challenges in Europe. There are elections. There is also some political shifts in some countries. So you can never, sometimes Latin Americans are fleeing economic instability, political instability, or they come to Europe and find a little bit of the same thing. But I think that there's different scales of repercussions on portfolios, right? So for European standards, you could say, things seem uncertain and unstable, but coming from the prism of a Latin American that have to deal with a lot more upheaval, a lot more of uncertainty, of the political pendulum shifting aggressively from left to right and left again. Europe seems like
Security
very
place.
stable.
Yeah.
Absolutely.
That's great. That's great to hear. So thank you. Thank you a lot for your time.
Thank
It's a
you.
pleasure to have you here.
Thank you for the conversation.